Market Analysis Mastery, the definitive guide to fundamental and technical trading, by BookSmartClub. Introduction. The financial markets represent the most sophisticated pricing mechanism ever created, where billions of dollars change hands daily based on the collective wisdom and emotions of participants. To navigate these waters successfully requires understanding both the intrinsic value of assets and the market psychology that drives price movements in the short term. This comprehensive guide bridges the gap between fundamental and technical analysis, providing traders and investors with a complete framework for market analysis. Unlike most books that focus exclusively on one approach, this work reveals how professional traders combine both disciplines to achieve superior returns across all market conditions. The methodology presented here has been refined through years of institutional experience and rigorous backtesting. Whether you trade stocks, Forex, commodities, or cryptocurrencies, these principles apply universally. You will learn how to identify undervalued assets using fundamental analysis, time your entries and exits with technical analysis, and manage risk like a professional money manager. Chapter 1. The Professional's Dual Approach. Successful market participants understand that fundamental and technical analysis are not competing methodologies but complementary tools. Fundamental analysis answers the question of what to buy or sell, while technical analysis determines when to execute those decisions. Consider Apple Inc. in late 2018. Fundamental analysts noted slowing iPhone sales and reduced revenue guidance. Technical analysts observed the stock had already declined 38% from its highs and was testing a critical support level that had held for 3 years. Those who understood both perspectives recognized an exceptional buying opportunity before the stock's subsequent 200% rally. The chapter explores several case studies demonstrating this synergy. 1. How value investors use technical analysis to avoid catching falling knives. 2. Why momentum traders still monitor fundamental metrics. 3. The institutional approach to blending both methods. A practical exercise guides readers through analyzing 5 securities using both fundamental ratios and technical indicators to identify potential opportunities. Chapter 2. Fundamental Analysis. Deep Dive. True fundamental analysis extends far beyond simple ratio calculations. This chapter provides a comprehensive framework for evaluating companies across 7 key dimensions. 1. Financial health. Liquidity ratios and solvency metrics, cash flow analysis techniques, red flags in financial statements. Second, business model. Quality, revenue durability assessment, cost structure analysis, capital allocation efficiency. Third, competitive advantage, moat identification and durability. Market share trends, competitive threat evaluation. 4. Management quality, Oswaris, insider ownership patterns, capital allocation track record, compensation structure analysis. 5. Growth potential, addressable market sizing, innovation pipeline review, market expansion opportunities. 6th, valuation, intrinsic value calculation methods, relative valuation techniques, margin of safety determination. 7. Macro considerations, industry cycle positioning, regulatory environment assessment, technological disruption risks. The chapter includes detailed walkthroughs of analyzing real company financial statements with templates for fundamental scorecards that readers can implement immediately. Chapter 3. Advanced Valuation Techniques. Moving beyond basic P/E ratios, this chapter explores professional-grade valuation methods used by hedge funds and private equity firms. 1. Discounted cash flow modeling. Building robust revenue projections. Estimating appropriate discount rates. Terminal value calculation approaches. 2nd, sum of the parts valuation. Segment breakdown methodology. Comparable company selection. Conglomerate discount application. 3rd, leveraged buyout analysis. Debt capacity assessment. IRR calculation frameworks. exit multiple estimation. Fourth scenario, analysis. Base bear bull case development. Probability weighting techniques. Stress testing models. Fifth, special situations valuation. Distressed securities analysis. Merger arbitrage valuation. Spin-off evaluation. Case studies demonstrate these techniques applied to companies across different industries and market capitalizations. Readers learn to build their own valuation models using downloadable templates. Chapter 4. Technical Analysis. Foundations. Technical analysis represents the study of market psychology through price action and volume patterns. This chapter establishes a rigorous foundation covering first market structure principles, trend identification and classification, support and resistance concepts, volume-price relationship dynamics. Second, price action analysis, candlestick pattern interpretation, auction market theory, applications, order flow analysis basics. Third market phase, identification, accumulation characteristics, markup phase signals, distribution warning signs. Fourth, multiple time frame analysis, top-down analysis framework, time frame synchronization techniques, confluence trading strategies. The chapter includes numerous chart examples with detailed annotations explaining key technical concepts. Practical exercises help readers develop their chart reading skills. Chapter 5. Professional Charting Techniques. Building on the foundation established in Chapter 4, this section delves into advanced chart analysis methods used by professional traders. First, institutional chart patterns, valid versus false breakouts, continuation pattern reliability, reversal pattern confirmation, second volume analysis secrets, volume spike interpretation, accumulation/distribution tracking, volume profile applications. 3. Advanced indicator use, moving average combinations, momentum indicator nuances, custom indicator development. Fourth, intermarket analysis, correlated market relationships, relative strength analysis, sector rotation patterns. The chapter provides specific trading setups with defined entry, exit, and risk management rules based on these techniques. Chapter 6. Combining fundamental and technical analysis. This pivotal chapter demonstrates how to integrate both analytical approaches into a cohesive trading methodology. 1. The screening process. Fundamental filters for opportunity identification. Technical triggers for timing entries. Second trade qualification framework. Fundamental strength assessment. Technical setup, quality grading. Overall trade scoring system. Third position sizing strategies. Volatility. Adjusted sizing. Fundamental conviction weighting. Technical confirmation scaling. 4. Active management techniques. Fundamental thesis monitoring. Technical exit signals. Dynamic position adjustment. Detailed case studies show this approach applied to long and short positions across different asset classes and time horizons. Chapter 7. Risk Management Protocols. No analytical edge matters without proper risk control. This chapter covers professional risk management techniques. 1. Portfolio construction. Correlation analysis. Position concentration limits minus beta-adjusted exposure. Second trade risk controls. Stop-loss methodologies. Profit target setting. Time-based exits. 3. Drawdown management. Volatility scaling. Position reduction triggers. Trading hiatus criteria. 4th. Psychological risk factors. Emotional bias recognition. Stress testing. Performance review processes. The chapter includes risk management templates and checklists for traders to implement immediately. Chapter 8. Building your trading process. Consistent success requires a repeatable, disciplined process. This chapter guides readers through developing their own professional-grade trading system. First, market selection. liquidity requirements, volatility preferences, analytical edge alignment. Second strategy, development, backtesting methodology, walk-forward testing, robustness checks. Third, performance tracking, metric selection, journaling best practices, continuous improvement. Fourth, technology setup, platform selection, data feed requirements, automation tools. The chapter concludes with a step-by-step action plan for readers to build their customized trading process. Chapter 9. Real-world applications. This chapter presents comprehensive case studies showing the complete analytical process from idea generation to trade execution. First, equity swing trade, fundamental screening, technical entry timing, position management. Second, Forex position trade, macro fundamental analysis, multi-time frame technical setup, risk-adjusted sizing. Third, commodity mean reversion, supply-demand analysis, extreme sentiment identification, contrarian entry signals. Each case study includes charts, financial models, and a post-trade review. Chapter 10. The Trader's Mindset. The final chapter addresses the psychological aspects of successful trading. 1. Analytical objectivity, confirmation bias avoidance, thesis flexibility, intellectual honesty. Second, process discipline, routine development, rule adherence, performance detachment. 3. Continuous learning, skill development, market evolution, peer collaboration. The book concludes with recommended resources and a 30-day implementation plan for readers to put these concepts into practice immediately. Conclusion. Market analysis. Mastery provides traders and investors with a complete framework for approaching financial markets with professional-grade analytical tools. By mastering both fundamental and technical analysis while maintaining strict risk controls, market participants can achieve consistent results across all market conditions. The journey to trading mastery begins with the first step. Start applying these principles today.